Discoms today are facing unprecedented cash flow problems. They desperately need help. Otherwise, they are unable to pay the power generating companies. You know, all the states, Discoms are in serious crisis. So in order to help them, there is a emergency liquidity injection, which is happening to the extent of 90,000 crores. Now the Power Finance Corporation, REC, the Rural Electrification Corporations, both of them put together will infuse liquidity of 90,000 crores to all the Discoms against all the receivables that they have. They're sitting there without getting paid. In turn, they are not able to pay the Gencos. In turn, the Gencos are wondering where they will have more money to pay for producing electricity. And at a time when we are talking about Atmanirbhar Bharat, at a time when we are also rightly claiming the credit for having made India a surplus power generating country, we've reached a stage where Discoms don't have money because they're sitting with receivables. So we are now making a provision, a one-time provision, for PFCs and RECs to infuse that money into the Discoms against their receivables, and who in turn, this will be done with the state issuing guarantees. The guarantee, the amount which is being infused on guarantees being given by states. Now, obviously, having received that infusion of money, the Discoms will pay the Gencos. Gencos in turn will clear their dues and keep the cycle moving. That for government procurement, tenders up to 200 crores will no longer be on global tender route, meaning global tenders will be disallowed in government procurement for tenders up to 200 crores. Why is this being done? Majority of the MSMEs in India were unable to supply those big mother units, as you may call, big, large companies, who they were serving all the while. Suddenly the conditions became, based on the global tenders, unmatchable by our MSMEs. So they were disqualified from supplying to companies for whom they actually grew as ancillary units. As a result, many of our MSMEs were not anymore able to participate in supplying products to many of these large units. So by bringing this condition now, we are saying for global tenders worth 200 crores or less, particularly for government procurement, they need not be global tenders at all. So this will make MSMEs do their business with a lot more confidence and carry on with it. Self-reliant India will also then be able to serve Make in India, because small units can now be participant in government purchases. All Government of India agencies, such as the railways, road transport, highways, CPW, etc., will now give 6 months extension without any cost to the contractors, so that extension should cover construction work or goods and services contracts that they have with central government agencies. They can take additional 6 months to comply with the contract conditions. So the extension is up to 6 months, is what I'm being told. Okay. Covers construction. This shall cover construction work or cover even goods and services contracts. It will also cover completion of works and intermediate milestones that they may have. This will also cover and extend concessional period which is given in PPP contracts. So even the concessional periods will get extended up to 6 months. I said there are 6 major steps for the MSMEs. The first one, there is a collateral-free automatic loan for MSMEs which is being provided. This will give facility up to 3 lakh crores. 25 crore outstanding for those MSME units for whom 25 crore is the outstanding loan, or 100 crores whose turnover is will benefit from this. These loans will have a 4-year tenor and there will be a moratorium given for 12 months. These are going to be 100% credit guaranteed over as a cover given to banks and NBFCs on principal and interest. So this is going to be available till 31st October 2020. There are no guarantee fees, no fresh collaterals required. So I guess this will benefit 45 lakh units so that they can resume their business activity and also safeguard jobs. There is a fund of fund being created for infusing about 50,000 crore as equity into the MSMEs. This will benefit those MSMEs who have the potential and who are viable. So we spoke about those who are standard, we spoke about those who are NPAs and stressed. Now I'm talking about MSMEs who may be doing viable business and who need hand-holding because of the situation thanks to the COVID. So this fund of fund with a corpus of 10,000 crores through mother fund and daughter fund framework will be able to provide the growth potential MSMEs greater support, and this we think will help MSMEs to expand their capacities, and this will also encourage them eventually to get listed in the markets which they can choose. Now I come to talking about subordinate debt through which we want to infuse about 20,000 crores. These are meant for stressed MSMEs. So if you're providing for the standard, you're now providing for the stressed MSMEs. Now the stressed MSMEs do have a problem of equity. So for them, through a subordinate debt provision, we want to provide about 20,000 crore liquidity. 2 lakh MSMEs are likely to benefit from this. The functioning of the MSMEs which are NPA or are stressed, all of them will be eligible. Date of all income tax returns for the year 2019-2020 are now being extended from 31st July 2020 and 31st October 2020 to 30th November 2020, and tax audits from 30 September 2020 is being changed to 31st October 2020. So that is a measure which will help people not to worry about how they are going to do their compliance, will they be able to file their returns or not. So that is a step which we take. And the last one, which also is a taxation related measure, is the date of assessments getting barred, because assessment time gets barred with a certain date. We are conscious of it, we have taken cognizance of it, so we are saying date of assessments getting barred as on 30th September 2020 is now being extended to 31st December 2020. So 3 months extension is being given so that date of assessment doesn't get barred as of September 2020, it can wait till December 2020. We have now from, let us say, tomorrow till 31st March 2021, reduced the TDS rates and the TCS rates by 25% of the existing rate. So if the existing rate is 100, it will be reduced by 25%. This shall apply to all payments, if they are payments for contracts or professional fees or interest or rent or dividend or commission or brokerage. All of these will be eligible for this 25% rate reduction. Through this, and as I said, this will be coming into force from tomorrow and last till March 31st, 2021. And this we think, this reduction we think will release nearly 50,000 crores in the hands of the people who otherwise would have paid it as TDS. This reduction alone is going to give 50,000 crores back to the people, in the sense it will be in their hands rather than coming in as payment of taxation. Intention is to build brands. Intention is also to take local brands and build them to a global level. So there is a global value chain integration also as a part of this vision which the Prime Minister has put before us. Certainly when he says Atmanirbhar Bharat, it is not to look inwards and cut India to become an isolationist country. It certainly talks about a confident India which can rest on its strengths and also be able to contribute to the globe, the way in which the Prime Minister rightly pointed out. The production of PPE and masks and also ventilators to an extent has rapidly grown within these 40 days. We have the capability, we have the enterprise to build such capabilities and help the world with it.